Have you ever looked at a stock and thought, what if this becomes the next big winner? That's exactly what many investors are thinking about Navitas Semiconductor, ticker symbol NVTS. The company is involved in artificial intelligence, electric vehicles, fast charging technology, and next-generation power semiconductors. On paper, it sounds like the perfect growth story. So here's the question. If NVTS has so much potential, why am I still not buying it right now? Does that mean I think the company is bad? Not at all. In fact, I believe Navitas could have a bright future if management continues to execute well. But being a good company and being a good investment today are two very different things. That's something many new investors don't realize until it's too late. By the end of this video, I'll share the price range, where I would personally become much more interested in NVTS along with my long-term outlook. So stay with me. Let's begin. The first reason is simple. The company still has something to prove. Yes, the technology is exciting. Yes, the industry is growing. And yes, demand for efficient power chips could continue increasing as AI data centers, electric vehicles, and consumer electronics become more advanced. But opportunity alone doesn't guarantee success. NVTS is still competing against much larger semiconductor companies with stronger balance sheets, larger research budgets, and decades of customer relationships. Winning customers is difficult. Keeping those customers year after year is even harder. Right now, investors are expecting strong execution. That means every earnings report matters. Every revenue update matters. Every piece of guidance matters. If management delivers excellent results, investors will likely stay optimistic. But if growth slows even a little or guidance disappoints, the stock could react very quickly. That's the reality of high-growth companies. Expectations become very high. And when expectations are high, even small disappointments can create large price swings. That's why I'm staying patient instead of rushing into a position. After that comes the second reason. And honestly, this is the mistake I see many investors making over and over again. People don't just buy a company. They buy a price. Think about it for a second. You can have an amazing business, but if you pay too much for it, your returns may still disappoint. That's why I never buy a stock simply because everyone on social media is talking about it. Whenever AI becomes the hottest topic, money starts flowing into almost every company connected to artificial intelligence. Sometimes that's justified, sometimes it's not. The problem is that excitement can push stock prices much higher than the actual business is growing. The company might still report higher revenue. It might even announce new partnerships. But if investors were expecting something even better, the stock can still fall. That's how the market works. It doesn't reward good news. It rewards news that is better than expectations. And that's a huge difference. Personally, I would rather miss the first part of a rally than buy at a price where the risk is much higher than the potential reward. Patience has saved investors far more money than fear of missing out. That's why I'm watching NVTS closely instead of chasing it. I'm waiting for stronger confirmation that business growth continues, matching the excitement surrounding the company. Now here's where things become really interesting, because the third reason has nothing to do with technology, nothing to do with AI, and nothing to do with electric vehicles. It has everything to do with one number, a number that can completely change how Wall Street values this company. And that's exactly what we'll talk about next. So let's talk about the third and biggest reason. For me, everything comes down to one question. Can this company consistently turn its technology into stronger financial results? Because at the end of the day, the stock market rewards businesses that continue improving quarter after quarter. New products are exciting. Press releases are exciting. Partnership announcements are exciting. But sooner or later, investors want to see stronger revenue, healthier margins, and a clear path toward long-term profitability. That's the number I'm watching most closely. If NVTS continues proving that its business is getting stronger every quarter, my opinion could change. But until I see that consistency, I'd rather stay patient. Now let me be very clear. I'm not bearish on NVTS. Actually, I think the company has real long-term potential. The demand for power semiconductors is likely to grow as artificial intelligence expands, electric vehicles become more common, and fast charging technology continues improving. If management executes well over the next few years, I believe NVTS has the potential to become a much larger company than it is today. As for the stock price, this is only my personal opinion, not financial advice. In a bullish scenario, if the company keeps delivering strong growth and the overall semiconductor market remains healthy, I believe NVTS could realistically trade somewhere around $12 to $18 over the next couple of years. And if everything goes exceptionally well, stronger earnings, more customer wins, higher profitability, and continued AI momentum, then a move above $20 is certainly possible, but investing is never one-sided. If growth slows, competition increases, or future earnings disappoint investors, the stock could experience significant volatility before finding its next direction. That's exactly why I'm choosing patience over excitement. Because great investors don't just ask, "How much can I make?" They also ask, "How much could I lose?" And sometimes, the smartest investment decision is simply waiting for a better opportunity. Now I want to hear from you. What's your target price for NVTS? Do you think this stock can eventually cross $20? Or do you believe the market is still overestimating its future? Let me know your thoughts in the comments. I read as many comments as I can, and I'd love to know where you stand. If you enjoyed this video and found it useful, don't forget to hit the like button, subscribe to the channel, and turn on notifications because I regularly break down high potential growth stocks with both the bullish and bearish side of the story. Thanks for watching. Take care, invest wisely, and I'll see you in the next video.